Boom. There we go. There we go. All right. So we got, let's see. Name says bear. Kai says bear, Mari says bear. If you guys said that this is a bearish market structure, you guys are absolutely correct, right? This is a technical bearish market structure that we're in. And we're in this technical bearish market structure because price created a high, created our low, created a higher high, a higher low, a higher high. Then we came down, we broke through this low. This now becomes the key high. You create a lower high, and now we've just now created a lower low, getting through that resistance that we kind of struggle to break through yesterday, right? We kind of struggled to break through this resistance yesterday. So now that we've broken through this resistance, you can see the kind of clean price action with this current 4-hour candle to the downside, headed to our likely next target, which is down here at the 29.25. So let's take a look at what this 15-minute time frame is kind of telling us on the lower time frame and see if that kind of aligns with our overall thesis. So first, our 4-hour time frame is in fact bearish. Now let's take a look at our 15-minute time frame. In terms of our 15-minute time frame here, chat, where is, well, first of all, let's just determine this here. What is our 15-minute time frame? Is it bullish or is it bearish? Keith, I appreciate the follow, right? Appreciate you guys following up here. W's in the chat for Keith. Let's go ahead and do that. Okay, so Kai says bear, Mari says bear, Hollywood says bear. Mari says, I forgot the difference between the two. No worries, Kivana. A bearish market structure means the market is going to the downside, meaning we're creating lower lows and lower highs, something similar of this here. A bullish market structure means we're creating higher highs and higher lows, something similar to this market structure here. So if you have higher highs, which this high was higher than our previous high, this high was higher than our previous high, we read the charts from left to right, then that means we're in a bullish market structure and the market is going up. If you're creating lower highs, right, lower highs, we read the market's left to right, and lower lows, then that means the market is going down and it is bearish. So that's a quick one. Okay, yeah, so bearish, right? You guys are absolutely right. For all of you who said bearish, this is a bearish market structure here. Now, what we're going to do is we're going to play our game of cook or be cooked, so you guys can help me to identify where our key area of interest high is and where our key area of interest low is. Now, we ended up seeing a shift yesterday that we were looking for a continuation to the downside on, and price didn't take out our key area of interest high. So if we're looking at this here, chat, where is our key area of interest high? Would it be, well, let's start with the low. That's always the easiest. So where is our key area of interest low? Is it 1 here? Is it 2 here? Oh, right there. Hold on. 3 here? Or is it 4 here? Is it 1, 2, 3, or 4, chat? Ivana, appreciate the follow. So Kai says 3, Stony says 4, Itzanika says 3. Where is our key area of interest low? Introverted says 3. Good morning, Pretty Money. Good morning, good morning. Appreciate the heart, Pretty Money. Name says 4. My time says 3. What is the answer here, chat? So if you guys said 1, you guys are absolutely cooked. I didn't see any 1s in the chat. 1s, you guys are cooked. If you chose 1, unfortunately, you guys are cooked. So that is not our key area of interest high or low, excuse me. Now, what is our key area of interest low? If you guys said 2, you guys are also cooked. Unfortunate for the 2s there. So now that just leaves 3 and 4. 3 and 4, chat. What is our key area of interest low? I'm going to give you a little bit of a hint. Our key area of interest low is the lowest point in our market structure currently, right? The lowest point in our market structure currently. So what is our lowest point in the market structure currently, right? Everybody should be dropping the answer in the chat, right? What is the lowest point in the market structure currently? Kivana said the lowest low is 4. Curly says 4. 4. Abiba says 4. I should know this by now, says Kai, right? My time 4. That's why we do the reps, Kai. Pretty Money says 4. Stony says 4, right? Absolutely. It's the lowest point in your market structure currently, right? So 4 is our key area of interest low, right? That's our key area of interest low currently. And price is still pricing down. So no worries if you got cooked. Where is our key area of interest high then, chat? No worries. Where is our key area of interest high? Is it 1 here? Would it be 2 here? Would it be 3 here? Or would it be 4 here? Let me just make sure. Yep, there we go. 1, 2, 3, or 4. I love how NQ dumps pre-market every day. Yeah, it did dump pre-market here today, but that's good because it leaves us some nice price action, right? Those days where we get that market to move pre-market, it typically leaves a little bit of some price action for us to capitalize off of. So where is the key area of interest high? Remember, your key area of interest high is the high that started the move for the break of your low. What is our key area of interest high? So Kivana says 2, Josh says 2, Introverted Traverse says 4, Sis says 2, Derek 2, It's Anika 2, Stony 2, My Time 2, Introverted says 2. Remember, it's the highest point that started the move for the break of your previous key low. Where is our key low? In order to understand this, you got to know where your key low is at, right? Treasure says 3, Bernard says 3, Kivana says wait, 3 question mark. What's the hardest thing about trading? Being disciplined, right? Discipline is typically the hardest thing. Well, realistically, formulating a plan can be difficult as well, but once you have a plan, being disciplined can be the hardest thing. So Kai says 3, Bernard says 3, Sam 3, Mari 3. The kilo is kilo is low of 2. 3 previous kilo, yes, previous kilo. There's a hint there, right? There's a hint. 2 is the previous kilo. Keeping emotions out of trading, that could be another difficult thing, right? About trading. So in terms of our key area of interest high, if you guys said 1, you guys are absolutely cooked. You guys are cooked. It is not 1, chat. It is not 1. Now that just leaves 2, 4, and 3. And let me tell you right now, it's not 4, chat. So if you said 4, go ahead and drop a follow. I don't want this to be the last time that you see me. Now the 1s and the 4s. Now you guys got to choose. Is it 2 or is it 3? Right? Is it 2 or is it 3? It said, did BlackRock short the NASDAQ? What's happening? Well, great question, right? What is happening? The only reason why we have this addition in volume is because we were finally able to break through a very, very strong level here at the 29,500. Once we got through 29,500, I mean, we have clean price action to our left-hand side. So you can expect volume to come into the markets targeting us back down to the 29,250. So nothing special had to happen, but the fact that we got through a very, very strong level that price was just holding off at. And once you get through these strong levels, it takes volume to actually break. And once you get through that, volume typically continues you down to the next key area of interest. Hopefully that clears up a little bit there for you, right? Are you on TradingView? Yes, I am on TradingView. Do you set break even or just let full trade play out? I do go to break even at a 1-to-1 risk reward. So in terms of this here, our key area of interest high, chat, is not 2, chat. It is not 2. If you said 2, you guys are absolutely cooked. That's not our key area of interest high, because our key area of interest high is 3, chat. Why is it 3? Can anybody tell me why 3 is our key area of interest high? And just to kind of point this out here, we got relatively equal highs, but it is higher. If you put a line out there, it is higher than this area. Why is 3 our key area of interest high? Because it broke the 2 low. Absolutely right, Treasure Goblin, right? It broke the previous key area of interest low, which was right here, right? This was our previous low. Now, what do I tell you guys each and every day that we hop on here? How can you identify your key area of interest high? Well, if you know where your current low is and you know where your previous low is, all you have to do is you draw a box from your previous low to your current low and drag it up. Guess what, chat? It's going to be the highest point inside of the box. The highest point inside of the box. Why is this so important? Well, because yesterday we actually seen a market shift. So let's actually talk about a little bit what we saw happen yesterday. Price had created this high. We created a higher low, higher high. Then we created a lower low. we were actually looking for buys off of this level to see a steeper move to the upside. But when price broke through this low, guess what? It shifted the market structure from being bullish to now being bearish. And then what do we see happen? Well, this becomes your key area of interest high. And guess what? Which one is more likely to get broken? Your key area of interest low or your key area of interest high? Well, if we're in a bearish market structure, especially a continuation structure, it's more likely that we come back down to break through the low than it would be for us to break through our high. And so that's why it's so important that you're able to identify, well, what is your key area of interest high? Because that is the area that the market would actually shift from being bearish to now being technical bullish. Drop a 1 in the chat if this is making sense to you. Can you draw and explain the box one more time, please? Yes. So if you go from your previous key low, right? This was our previous key low, to your current key low, right? And you grab a box. You go from here to here, and then you drag it all the way up into infinity. It's going to be the highest point inside of your box, right? This is the highest point inside of our box. There's nothing else. If you dragged it up to infinity, there's nothing else inside of this box. So it's always, always, always going to be the highest point inside of your box. But you need to be able to identify your key area of interest low and your previous low, essentially, right? And your current low, which is typically easier to do because it plays into the 4 from the last. Yeah. Picking up what I'm putting down. It's the move that created the low. Absolutely right. Right. I see you guys with the ones there. How do you know where to draw your box? Again, it goes from your previous key low. So your previous key low, right? From there to your current low. That's where the box is gonna extend from, right? Mine just extends right because I have it extended right. But if I did this like with a regular box, go to here and then drag it up, let's just make it like this, and my box didn't extend right, so let's just go to the style and let's just do a regular box, right? It would still be the highest point inside of your box. Mine just, again, extends right because I use these as zones a lot of times on a larger time frame. So I want to extend it out if I'm, looking at a specific zone or area, which just makes it easier for me to see. Similar to what we've seen happen, like on this 4-hour time frame, you can see I drew this box out and then it just extends indefinitely to the right. So that's how you would draw your box. Oh, so the height of the box doesn't matter. No, it doesn't, because there's only going to be so much stuff inside of the box, right? Inside of this range, it's only going to be the highest point inside of the range. Because again, if I drew this box from here all the way down to here and I just dragged it up and not extend it right, there we go. There would be nothing else that would come inside of this box. There would be nothing else. No matter how high you go, there's never going to be anything else. So it's always going to be the highest point inside of your box there. Hopefully that makes sense. Okay, cool. Good morning, password. Is this NQ? Yes, this is NQ. So you're asking me, okay, Kyle, what are we looking for here today? Well, our 4-hour time frame is bearish. 15-minute time frame is bearish. We're in a continuation structure, not a corrective structure. We could target some of these key area of interest lows. That first low is going to be back down here at that like 29,250, right? 29,250 is where we can see price potentially gravitate to. If we can break that 29,250, I mean, we got some clean price action to the downside. I mean, 29,100 would be your next immediate area of resistance, but I mean, even that is a minor level of resistance up until you get down here to the 29,726. Right now, I really want to take a look on the grand time frame of what this market is kind of showing us here, because coming off of that bullish weekly, we did want to see a continuation to the upside with this current weekly. Now, understanding that this current weekly, well, we had no news, right? So there was nothing that was going to drive this volume except for price action. And the key area that we were talking about to look for was that 30,080, right? We broke through 30,080. That's where we had larger time frame resistance, which was right here, that we've been talking about for a while. So once we actually got back below this resistance level here, right? We got below this resistance level. I mean, this has just been a free fall to the downside, right? Price is just creating lower lows and lower highs, and there's nothing on a technical or fundamental, shall I say, aspect that can actually drive this market to being back to bullish, right? There's no volume that is expected to come in to shift this market structure. So we would anticipate it continues to go to the downside just based off of what we see happening this week. Now, next week, if I'm not mistaken, we will see a little bit more volume next week. We'll have to take a look at the calendar and see. Let's real quick. Let's peek into next week here. Let's see what we got. Next week, Monday, nothing. Tuesday, nothing. Wednesday, PCE data. Thursday, nothing. Friday, benchmark payroll revision. So nothing too crazy next week as well. So that leads me to believe, okay, a couple of things that we can put together, right? Our current weekly time frame is bearish. If the next week doesn't have any volume, well, what's likely to happen? This current weekly low gets broken and price gives us a steeper move to the downside. Now, this is all still what I believe to be a corrective structure. Well, what do you mean by that? Well, on the weekly time frame here, look at this impulsive move that we had. We had 11 days where the NASDAQ just printed in at all-time highs, right? This run goes from April to May, right? It was to May. April to May, we just had an immense bullish run to the upside. Well, this push down has been relatively slow in comparison to the volume and the impulsive move that we've seen to the upside, right? So this is just a impulsive move followed by a corrective structure, which would likely offer another, guess what? Impulsive move to potentially take out all-time highs, which is what I'm bull biased towards. Like, I am bull biased towards all-time highs getting taken out, right? Especially if this monthly can close as a bullish monthly. I believe that in the next 11 days, we see the next month begin to try to fill this wick, and then the quarterly candle, which is what I'm most inclined to, right, flips actually to being bullish. We flip to being bullish on this new quarterly, and then we're gonna see all-time highs get more than likely get printed in, right? So just a couple of things that, you know, we're speculating in terms of how this current market can move based on a grandioso time frame, right? I know a lot of us, we're day trading, but we're more so interested in, you know, how can we both understand the markets in the price action. Like, that's the biggest thing here. I appreciate you following Stessy Guts. I appreciate you guys following up there. Appreciate you guys there. W's in the chat for those guys there. We're creeping up on 7K followers, chat. 7K followers. So if you guys are getting value out of this, be sure to drop a follow. I don't want this to be the last time that you guys see me. I want you guys to be able to come back and join us every day. We do this each and every day. We did take a sell yesterday. Adrian, we did take a sell. We took a sell after the shift here. So the market structure is shifted. It came back down, broke through this key 15-minute candle low. It retested the key 15-minute candle low. This was the sell that we took yesterday. We ended up taking profits at a 1-to-1. Most, or like 50% of the profits at a 1-to-1, and then left it to run, the runner to run. We wanted to see it continue to break through this low here. We needed it to hold back below this 29. I think it was 29. What was it? 29. 430. We wanted to see the 29,430 low hold, and for price to give that steeper move to the downside to target what is today's target, this 29,250 level, which is the resistance that we have here. This is the anticipated move that we wanted to see off of that retest, but we didn't get that continuation. Price took us the runner out at break even, and then, you know, kind of trickled up a little bit higher throughout the rest of the day. Not too crazy though yesterday in terms of overall markets, nothing too crazy. But once we seen that 15-minute shift, we created a high, higher low, higher high, lower low. That shift there led us to believe that, hey, look, we could potentially see a steeper move to the downside. Okay, so let's take a look at another asset, gold. Gold is another asset that I want to take a look at here today. Gold is coming off of a very, very impulsive move to the upside yesterday. Pre-market, we got a beautiful run to the upside for gold, and then it kind of slowed up. But what is gold doing on this 4-hour time frame? It actually shifted the 4-hour market structure. So talk to me, chat. Is this a bullish market structure or is this a bearish market structure? Did you enter on the 1 minute or the 5? I entered on the 5-minute candle, so I didn't enter on the 1 minute candle. And now that I'm looking at it, it might have been better for us to enter on a 1 minute candle, but since it was the first initial shift, I really wanted it to confirm that it was pushing to the downside. So if you take a look at this here, you might have got a better risk to reward real quick. Let me just check this on that first 1 minute. Yeah, this was the first 1 minute candle that closed. You take an entry here with a stops above here. You get yourself a little bit better of a risk to reward. Instead of going to a 1-to-1 like I did, you get yourself about a 1-to-2 risk to reward, especially breaking through this low here, taking profits at about a 1 to 1.6. Not a bad move, but my trade was this here. So we were a little bit closer to about a 1-to-1 R over the 5 minute, just using discretion, being that it was the first initial shift. But yeah. So going back to gold, sorry. So talk to me, chat. What time do you go live every day? We go live at 8 a.m. Eastern Standard Time on TikTok, and then we trade Monday, Wednesday, and Friday live at 9:15 a.m. Eastern Standard Time with our VIP members. So if you guys do want to join the VIP, you guys can join the VIP. Just DM me the word join, JOIN, and you guys will be able to join up the VIP, right? We're trying to grow the community. We're trying to make it strong, get more active in there. So in terms of this market structure, really quickly though, chat, are we bullish or are we bearish on this 4-hour time frame? Ty baby, I appreciate the follow. Appreciate the follow. Michael Berry, appreciate you following up there. No love, I see you. I see you, no love. Appreciate you guys following up, man. Okay, so talk to me. So K says bull, E-Man says bull, user bull, my time bull, legendary bull, Kai says bull. This is a bullish market structure, chat. Why is it bullish? Well, because we're creating higher highs and higher lows. Price created a high. Hold on, wait for it. We created a high, a low, higher high, higher low, higher high, higher low, higher high, lower low, lower high. Not a lower low. And then what did price do? It created a higher high. So this to me is all one move. This here, it all counts as one move. So your key area of interest low on the 4-hour time frame right there, because this is the lowest point that started the move for the break of your previous high. You go from this high to this high, drag your box down. It's going to be the lowest point inside of the box, which is right there. So that's your key area of interest low on the 4-hour time frame. And this market structure has shifted from being bearish to now being bullish. But that doesn't mean that that's what is happening on our 15-minute time frame. Because what is happening here on our 15-minute time frame, chat? Are we bullish or are we bearish on our 15-minute? Talk to me. Are we bullish or are we bearish on the 15-minute here, chat? Kai says bear. Legendary says bear. Name says bear, right? Jesus is Lord, bear, right? Yeah, we're bearish on the 15-minute time frame. Price is creating lower lows and lower highs. Well, now we got to play cook or be cooked. Where is our key area of interest low, chat? Where is our key area of interest low? Is it one here? This is a 50-50 ball, right? I'm going to give you guys a 50-50 ball because a lot of you been getting cooked. Is it one here or two here? Where is our key area of interest low? Talk to me, chat. Where is our key area of interest low? And I appreciate you guys who are liking the stream. If you guys are getting value, be sure to tap the stream after you go ahead and put in the chat what your answer is. 50-50 ball here, right? So you know you got half the percentage chance to make it, right? So what we got? Jesus Lord says 1, E-Man says 2, Julie says 1, Kai says 2, Yanelli says 2, Legendary says 1, Jesus Lord says 2, My Time 2, 1 says JB, Julie says no 2, Bernard says 2, Mari Trade says 2, Kiwan says 2, Sarah says 1, Jesus Lord 2, Power Tap, appreciate you, My Time, Unapologetic says 1, Name says 2. So we're split 50-50, chat. We're split 50-50, and unfortunately, one of you are absolutely cooked. One of you are absolutely cooked. And if you said 2, W's in the chat for my 2s, because 2s, you are absolutely correct. You're correct, 2s. 1s, you guys are absolutely cooked though. 1s, you guys are cooked. Our key area of interest low is right here. It's the lowest point in our current wave, chat. It's the lowest point in our current wave, and that is this area right here. That's our key area of interest low. Right, that's our key area of interest low. So now, no worries if you guys got cooked. Don't feel bad. If you did get cooked, be sure to drop a follow. I don't want this to be the last time that you see me because we're training up your EYES. You know what the EYES is? It's the best indicator that you guys have at your disposal. The EYES is, in fact, your eyes, right? Your eyes. Currently going through this. Let me see. Oh, I have to. Sorry, chat. I have to lock in. Give me 1 second, chat. Let me just. When I get off live. All right, perfect. Oh, that said love. Hold on. I gotta correct that. When I get off live, not love. I seem a little homo. All right, there we go. Appreciate you guys with the follow. I'm sorry, guys. I'm sorry, chat. So appreciate you guys who are liking it up. So what is our key area of interest high? I know I lost a lot of you just then, right? I lost a lot of you. But what is our key area of interest high? We're going to play cook or be cooked again. Is it 1 here? Is it 2 here? Is it 3 here? 1, 2, 3. Chat. 1, 2, 3. Can't see. Okay, hold on. Oh, it's frozen. Okay, I don't know why it froze here. Hold on. Bear with me, chat. Talk to me. Bear with me. Let's do this. There we go. Boom. I don't know why it froze all of a sudden. Okay, so what is our key area of interest high? Is it 1, 2, or 3, chat? Is it 1, 2, or 3? 1, 2, 3. 1, 2, 3. You guys should be able to see it now. It was frozen. It froze because you cooking. Absolutely. Right. So Julie says 3. Legendary says 2. What is the key area of interest high, chat? Kiwan says 3. Jesus Lord 3. DJ says 3. Sarah says 2. JB says 3. Remember, chat, you can go from your previous key low to your current low, and it's going to be the highest point inside of that box. But you first need to identify what is the previous key low. And I'm going to tell you, the previous key low getting broken actually shifted the market from being bullish to now being bearish, which is why we see this bearish movement, right? Talk to me. I got high off something. Fidel. 3, Kai says 2. 3, unapologetic says 2. June says 2. What is, if you guys are just joining us up, you're identifying what your key area of interest high and your key area of interest low is. We're playing a game of cook or be cooked. Now, let's take a look at this. If you guys said 1, you guys are absolutely cooked. This is not our key area of interest high, chat. This is not the key area of interest high. You guys are cooked. Now that just leaves 2 and 3. I'm going to give you guys a hint here. I'm going to give you guys, if you did say 1, go ahead and drop a follow. I don't want this to be the last time that you guys see me, right? Our previous low was right here. That's all I'm going to say. This is our previous low because you can see this was the low that started the move. Well, I ain't going to say too much. That's all I'm saying. It's the previous low. So remember, if you go from your previous low to your current low and you drag your box all the way up, it's going to be the highest point inside of your box. Talk to me, chat. What are we feeling? Go ahead and lock in your final answer. This is the final answer, chat. Final answer. Lock in your final answer. Is it 1 or is it 2, chat? Or 2 or 3? Is it 2 or is it 3? Excuse me. Is it 2 or is it 3? Sarah says 2. Name says 3. My time says 2. JB says 2. Draw the box. I'm not drawing the box. You draw the box. I'm sticking with 3 from the previous low. Is that a change of character? Yes, it is. Unapologetic says 2. Julie says LOL. Yanelli says 2. Why 2, bro? Still 2. Romy says 2. Looks like it's 2. Again, remember, let's take a look at this market structure. If you guys said 3, You guys are absolutely cooked. It is not 3, chat. It is in fact 2. Somebody said, why is it 2? Let's break down what the market did. The market created this high up here. Boop. Created a low. Created a higher high. And guess what it did from this area here? It came back all the way down to break through this low. This was your previous low. Once we actually broke through this low, it shifted the market structure from being bullish to being bearish. Well, what did we say? You can draw a box from your previous low to your current low, and it's going to be the highest point inside of your box. What is the highest point inside of your box? That's 2. That means that if price breaks through this high, it actually shifts the market structure from being bearish, right, where we're anticipating lower lows and lower highs, to now being bullish to create higher highs and higher lows. That is where your previous key high is at. Does this make sense? Drop a 2 in the chat if this makes sense. Always 2. Not always 2, but sometimes. Sometimes. I try to mix it up. It's been 1 a lot of times, so that's why I try to mix it up. Right? Okay. Well, you guys are picking up what I'm putting down here. So in terms of this market structure, if our 4-hour is bullish, but our 15-minute is bearish, what type of structure are we currently in? Because there's somebody who's new here. They don't know exactly what type of structure we're in, right? But if our 4-hour is bullish and our 15-minute is bearish, what type of structure is that? Kai, you have absolutely crushed it. You're absolutely right. It is a corrective structure. What was the question again? What type of structure are we in, right? If our 4-hour is bullish and our 15-minute is bearish, we're in a corrective structure. Now, why is it a corrective structure? Because it goes against the direction of our larger time frame trend. If our 4-hour is bullish and our 15-minute was bullish, they're both in alignment, which means we're in a continuation structure. That means we're continuing in the direction of our larger time frame trend. So what do we know about corrective structures? Well, oftentimes they're short-lived in lower, slower volume. Well, what do you mean by lower, slower volume, Kai? Okay, well, let's take a look at yesterday's move. Yesterday's move took how long to push to the upside? From this candle low here to this candle high, it took a matter of 12 hours. 12 hours, chat. Well, how long is it taking us to push from this high back down? Well, we're already at 16 hours and we haven't even got 50% of the push, right? So lower, slower volume. And guess what's on the horizon? Guess what's on the horizon? Resistance, the piece de resistance. We got this resistance right here. So this is an area that could be pretty difficult for gold to break through, right? And we already got lower, slower volume. So this is a corrective structure. It goes against the direction of our larger time frame trend. And you would anticipate some type of potential pivot off of this level to go back into the high to get another impulsive leg to the upside. Does that make sense? Does that make sense? Kai got NASA Wi-Fi. Dude responded before we even said it on the phone. Word. Kai's responses are generally pretty quick. I'm not gonna lie to you. I'm not gonna lie. Typically, that's the first one that I see in the chat. Kind of lost me. Okay, no worries. Wow, this guy's so smart. Well, I appreciate that. I appreciate that. Kind of lost me. Okay, yeah. Let's take a look at it again, right? Corrective structure means that the 4-hour time frame and the 15-minute time frame are not in alignment. You guys told me the 4-hour time frame is bullish because we created higher highs and higher lows, right? We created this low that started the move for the break of this previous high, right? Because hold on, let me just draw this out. It's easier for a drawing. We high, low, higher high, higher low, higher high, higher low. We're bullish, higher high, lower low, shift to being bearish. We think that this is going to be a lower high, comes back down to your key area of interest low, which should be the target, and then it instead creates a high. This is the lowest point that started the move for the break of this high, which shifted the market structure from being bearish to now being bullish. What we're doing now is we're seeing price push back down into that resistance, and when it's pushing down slower than it did when it pushed up. We can identify that by not only how big the candles were when we pushed up, but how much longer it's taken to push to the downside, right? So that tells us that the volume is a little slower when it comes to this move to the downside, and we're creeping up on a resistance level where we can actually see a pivot off of. This is telling me that we're in a confirmed corrective structure and that it's likely that we see another potential impulsive move to the upside. Well, what do you mean by impulsive move? Another strong continuation continuation move to go up, likely targeting back up into the high. That's not to say that the market structure is shifted yet. We need the 15-minute time frame to shift to being actually bullish, right? We need the 15-minute time frame to shift bullish before we can say we're in this impulsive wave. But similar to what we've seen happen here, right? This is the same exact move here, right? We get this impulsive move to the upside, long, strong move, low, slow move to the downside, right? That's essentially what we have, right? That's where we're at. Impulsive move to the upside, low, slow move to the downside. What followed that? Another impulsive move to the upside here, right? Then what do we get after that? Low, slow move to the downside, impulsive move up. Low, slow move to the downside, slower move to the upside. And we talked about how each wave got smaller and smaller. As you can see here, if we circle it out, this first move, very, very strong. Second move, slightly smaller. Third move, slightly smaller. Fourth move, smallest. After that, we actually seen the market shift from being bullish to now being bearish. But then what did we get? Well, we got another impulsive move to the upside. First move, pretty strong. Next move, likely not as strong, but still pretty strong to the upside. Similar to what we've seen happen in this wave right there, right? So hopefully that cleared it up a little bit for you. This is gold. Yes, this is gold. This is not yeah, this is gold. This is gold test. Wait, and that's on daytime. This is on the 4-hour time frame. This is on the 4-hour time frame. Sarah, I appreciate you for saying that my explanations are good. Next slide, can you add it so we can toggle full screen? I didn't even know that was a thing. But yeah, for sure. If I figure out, I'm gonna try to figure out today how to do that so that you guys can see full screen. I didn't know that was a thing that you can do. I'll have to look up how you do that. Yeah, well, I'll figure that out. We'll get that so that you guys can see the full screen. That would help me if you guys can see the full screen, because I don't know whether you're centered, not centered, or where this should be. But yeah, so I want you guys to just understand, right? This is obviously, I don't give signals. I don't want you guys to think of this as a signal service. This is something that teaches you how to train your eyes to read price action, right? I do have a step-by-step strategy. I do send out my trades, but I want you guys to learn how to actually execute on your own, right? That's the whole purpose of For the Culture FX. God forbid anything happens to me. I want you guys to be able to take what you learned and actually apply it into the markets, right? That's the whole purpose of this, right? Can we all just agree on that? Drop a 1 in the chat if you're okay with that. If you're okay with that, we can keep it going, right? Right? If you just want to follow somebody blindly, this is not the place to be. You can follow me, but I wouldn't do it blindly. I want you to actually understand why it is I'm taking the trades that I'm taking and how I put together the story of what the market is telling me in order to formulate my plan going forward. How all of these pieces, these moving pieces, actually work together to give us our overall story, and how we can actually use those pieces to set, hey, look, this is what potentially could happen based off of the clues the market is currently giving me, right? And as the price action keeps updating, it then is going to update the story, and we're going to have to update how we're going to actually execute. But as of right now, this is what the story is telling me, right? This is what the story is telling me. Okay, I see the ones in the chat. We can all agree there, right? How many of you feel like you got a little bit better here today, chat? How many of you feel like you got a little bit better? Can I get a yes in the chat? Can I get a yes? I feel like I get better the more I do these, right? Because look, you guys aren't getting more reps of me saying it than me actually saying it. You know what I'm saying? So I get hella reps. I'm getting hella reps. Okay, Kai says yes. Always Mari says yes. Okay, perfect. Name says yes. Legendary says yes. Right. Okay, perfect. You guys are getting some value out of this. And I know that I'm not just wasting my time here. You guys are picking up what I'm putting down. Now, one asset that I told you guys that I've been bull bias on I'm bull bias until further notice on oil. Now, I'm not gonna lie to you. As soon as oil went up yesterday, so did the price of gas. It went from where I'm at, 269 to 279, right? I'm talking, it was almost immediate. I drove down the street, got gas 269, drove like an hour later, came back 279. I said, oh, 279. Other one is like $3. I said, oh, dang. It went up just like that. And the crazy thing is I got gas. It was like, yeah, it probably shouldn't go up anytime soon. spike of oil goes up, gas immediately go up. I don't know if it directly correlated that fast, but I'm telling you, that's what happened. That's what the charts happened, and that's what was reflected with the price of gas, right? I'm in Virginia. Whew, 380. Prayers to you. You feel me? What time is it by your side? It is currently 8:46 a.m. Eastern Standard. 8:46. Good question. Somebody asked a question. Let me see. Michael asked the question. If you could suggest a book or video to help with price action, market structure, and liquidity, what would it be? Okay, great question. Well, for one, I would go to, oh, I got you, right? The video that I would recommend, this is, no self-promoting or anything, but is going to my YouTube and looking up how to start trading as a complete beginner in 2026, right? If you go to my YouTube and you go to that video is going to walk you through all of it. It's going to have, market identification in there. You'll see the full 9 yards of how I go from identifying higher highs and higher lows. And it has some practice questions in there. So it's like, is this a bullish market structure or is this a bearish market structure? It goes through a bunch of different examples so that you can actually see and practice as you watch along. And then it'll also take you through how I scale with funding firms and things like that. That's one thing that I would recommend. I do have more videos coming out that will talk you through it. I have a video that should be coming out next week on the trades that we took, not yesterday, but because yesterday was Wednesday, on Tuesday, where I go through my exact step-by-step blueprint here and how we were able to execute on 2 banger trades on Tuesday, specifically using I'm talking step for step, bar for bar, this system here, right? Which is the same system that I use each and every day. So that'll help as well. In terms of books, well, there's a lot of books. I read this book here, Price Action Trading Secrets, where you can learn about price action. In terms of it, it really just, yeah, okay, let me rephrase this. It didn't tell me anything that I didn't already know. So I was a little underwhelmed when looking at it, because I had been trading for about 3.5 years before I had picked this up. But this is a good book to understand price action. It talks about bullish candles versus bearish candles, bullish engulfing, strong buyer intent, some of the different patterns that you'll see in terms of possible reversals. But every book typically will offer it has some good information. For me personally, I don't learn this way though. I would actually have to be on the chart, seeing what the chart says. But this is a decent book, right? Price Action Trading Secrets. This is a book I got 3 years ago. It really just covers the basics of, support, resistance, accumulation, AMD, accumulation, manipulation, distribution, all of those different things. So it's a solid book for sure, especially as a beginner. It can be what I would think though, truthfully, and this is just my own personal opinion, if you don't already have a little bit of an understanding of charts, reading this book may be a little difficult. This would be a little complex. But since I had, again, at the time, had already been on the markets for 3 years and been seeing price action, it just kind of opens up a lot of different things. I personally am a visual learner, so I had to watch people trade live and explain it in real time, because the book is great that you get all these examples. The markets is always constantly changing though, so being able to see it in real time, that's why we do these live sessions. Because for me, I need to be updated in the thought process, step for step, bar for bar. Okay, what just happened? Oh, well, we tapped into that 29,250. Why did we get this rejection off of 29,250? Would have been a question that I would have asked. And then, you have somebody on live telling you, hey, look, that 29,250, that's where we had that resistance off of. That's where we was anticipating price to go. If you break over through this level here, that's the immediate next area you would anticipate price to go. Guess what happened after you tapped into this level? You immediately started to see a rejection off of this level. That's something that you I needed to hear live in order to understand that and to see it updated. And so that's why I think the VIP is so important, not just because you start to learn how to utilize and implement my system, but you also learn the thought process behind each decision that I make, right? I'm explaining absolutely clear exactly what it is that I'm looking for and how and why I'm looking for the moves. So the trades that we took yesterday, the trades that we took the day before yesterday, right? All of them are explained. And so you start to understand not just how or why I'm taking the trades, or not necessarily how I'm taking the trades, but why. What is the thesis behind it? Why did I set this target? Why did I set this entry, this stop loss, right? You start to understand the thought process of a profitable trader, and then you can replicate that. That's much easier to replicate than to take something out of this book and then try to apply it to an ever-changing market. At least that, in my opinion, right? In my opinion. Someone made a fake account of me. This is the only account that I have. Yes, this is the only account, because somebody else messaged me a couple days ago that they got scammed, depositing money into a broker saying that I would help them flip the account. And I first of all, I'm not going to trade your bread. So I would never trade you guys' money. I'll teach you how to trade your own money, right? So if there's anybody who hits you up that say, hey, look, you deposit some money here and I'll trade it for you, I won't do that. So you guys can, I'm just telling you up front, I only have one account. This account is the account that I have, which is why I'm trying to get over 10K, because once you get over 10K, it becomes a little bit harder to fake. You got to have an account with over 10K followers. But, you know, since I'm at like this 6.3K, right? That's why I need you guys to help follow me so that we can get over 10K, so that we can be a little, you know, a little harder to replicate. But this is the only account that I have on TikTok. I do have an Instagram account with 21,000 followers, and then YouTube, right, as well. But this is the only TikTok account I have. Okay, Tez, you DM me? Okay, where? I'll make sure you get that, Tez. I'll make sure you get that. For yesterday on NQ, how do you know to enter the 1 minute candle at 9:59 and not 9:40? The 1 minute candle at 9:59. I didn't enter on the 1 minute candle yesterday. That was the biggest thing. For me, my entry was after this 10 o'clock candle close. So it wasn't, you have to wait. Okay, so great question. I see what you're saying. You want to wait for your candle to close bearish first. That's the first thing, right? So in this pullback here, you see, you said 9 and not, yeah. So let me go to it. You want to wait for first your 5 minute candle to close bearish, right? So the first candle that closed bearish was this candle here, the 10 o'clock candle, right? So what you would be waiting for is the first 1 minute candle after this 10 o'clock 5 minute candle close, right? So you wait for this candle to close bearish to confirm that price still wants to go to the downside. Then you dial down to the 1 minute time frame, and it'll be the first 1 minute candle that closes bearish after that one. Why is that? Because you anticipate that to be the top wick, right? So for this trade, it would have been the, what is that? When did this candle close? Let me see. 10 o'clock closes right here. So it would be within the 10:05 candle, if I'm not mistaken. Let me just make sure that this is right. Then we zoom back down. Go to here. Yep. Yeah, this would have been that candle that closed. This candle right here, 10:05 was bullish, 10:06 bearish. That is the entry candle there. That's the entry candle. Stop goes above that immediate resistance there. If you scale in on the 1 minute, I scaled over the 5 minute. So once the 5 minute actually closed bearish, I just use this full 5 minute as my stop. Being that it was the first initial shift, I wanted to give myself a little bit more room to breathe, because we were bullish and then we came down pretty aggressively bearish. We broke through this key 5 minute low, then came back to retest that 5 minute low there, and then price, you know, we wanted to see that continuation to the downside. I wanted to see price go all the way back down here. So that was the overall thesis, which is why I was okay with allowing myself to have a slightly bigger stop, because the risk to reward was still going to be sufficient. And that was a scout. How often is that minute candle a fake out? I I couldn't tell you on the specifics, like a verbatim. For me, I use discretion. So if we have very strong, high volume markets, then I'm scaling in on that 1 minute candle all day. It's going to offer me a higher risk to reward. And since we have the volume in the direction of my trend, especially a continuation with tons of volume, right? I'm scaling in on that 1 minute all day. Right, it's going to give me a higher risk to reward and it's worth it. But I can't tell you how often that first 1 minute candle is going to invalidate you because that's not something that I've tracked, right? Because I typically use discretion whether I'm using the 5 minute candle or the actual 1 minute candle. It just really depends on how much volume is in the markets for me. Typically, I say the safest bet is just to use the 5 minute candle stop, right? But you know, to each his own. To each his own. So do you like to see a 5 minute confirmation rather than a one? Yeah, typically, right? Yeah, typically I like to see that 5 minute confirmation rather than a one. Now, in terms of this, just because it's a higher confirmation, it's like, okay, which would be stronger, a 4-hour candle or a 1-hour candle, right? Or 4-hour candle or a 15-minute candle? Which one gives you the stronger confirmation? Well, in the same comparison from the 5 minutes to the 1 minute, the 5 minute candle is going to give you a stronger confirmation than a 1 minute shift. Now, I don't trade the 1 minute can't, like, just because we pulled back here, and I know a lot of traders, they'll trade right off of the resistance. I personally don't trade resistance like that, where you just get like a rebound off of this area and you're just trying to get in at this kind of area of interest. Two reasons why I don't do this is, one, you don't know, I personally don't know where the heck to set your stop loss. And then there's a lot of times where price will just completely just run through this and invalidate. And I've learned that more consistently, it gives me that candle confirmation before it actually runs. And so that's why I just wait for it, because I'd much rather have the candle confirmation, set my stops above that candle confirmation because we just confirmed, and then let it run, you know, from there. Like that's it. But it doesn't always, that doesn't mean we're always right. Because yesterday, the first trade that I took was this bullish trade, right? I was anticipating a bullish market structure. We created a high, higher low, higher high. Price came back down into this area here. We got this candle close. We went ahead. We took buys off of this candle, right? Anticipating a steeper move to the upside all the way to target back into this high and anticipating a larger time frame pivot. Now, a couple things that were invalidated by this, or not invalidated, but a couple things that were in accordance with this trade, which is why we reduce risk, is one, it was a corrective structure based trade, right? Which means it goes against the direction of the larger time frame trend, which in fact was bearish, right? 15 minutes was bullish, 4 hours bearish. And so once we pull back here, we went at a reduced risk, anticipating that, hey, look, we could potentially get invalidated. Once price broke through the key 5-minute low and said, hey, look, we're not buying anymore, we're selling, we took the re-entry on the sell for that continuation to the downside, or anticipation of a continuation to the downside. And ES, it worked yesterday. And yeah, and the YM worked yesterday too. The exact trade that I was looking on the NASDAQ for the continuation up happened on the YM, right? So the Dow Jones, this 5-minute candle, bullish candle, stops below that low, and then the continuation to the upside to target back into the high. That's the trade that I was looking at, the first trade that I was looking at on the NASDAQ. It just didn't execute on the NASDAQ. ES did the same thing, right? This candle here, I mean, a much bigger stop loss though with this candle, but you come back down into your resistance low, you get this nice resistance low, right? Retest. You get this nice strong bullish candle here, stops below that low, target back up into these highs. I mean, solid move back up into the highs. The NASDAQ is literally the only one that did not do it and invalidated it. So that's why we took the stop out there on that first trade. So, you know, it just depends, right? It's not always a perfect science, but through repetition and through like just doing it over and over and over again, that's how we build our consistency there. So what do we got going on in the NASDAQ? The NASDAQ is rejecting off of that 29,250. Somebody drop in the chat why we rejected off of the 29,250. Do you use scanners? No, I do not. No, I do not. Now, as it's pulling back now, how far do you think it will go based on structure? Great question, right? Great question. ES gives respect to levels, but sometimes NQ doesn't. Yeah, and I have, over the past 5 years of data, I have a higher win rate and success rate on the NASDAQ than any other asset, which is why it's the asset that I typically choose to go for over, you know, typically anything else when utilizing this system. Now, this is rejecting off of this because yeah, we got that larger time frame resistance there. Somebody asked, where do I think it can go? Well, all the way back up to that resistance that we had kind of broke out of. So anticipation of a price coming back into this area here, this general area, and we may see a rebound off of this area for then a steeper move to the downside. But remember, this level was a strong sucker, right? So breaking through this level could take a little bit of volume. If we get a retest and a strong rejection, right, candle wick rejection, something like this off of this level here, right, we come back up and then we get a candle that looks like this one right here off of this level and this resistance, then all day I'm looking for that confirmation candle, stops above, looking and target back down into the lows like how this did. This would be the same thing, confirmation candle, stops above, targeting back down into the lows here, and then potentially into that next target down there. Drop a yes in the chat if that makes sense. Do you trade ES? Yes, I do trade ES. I do trade. Well, I typically choose between what I believe is the best asset in the day. Pre-market, the NASDAQ was looking pretty strong in terms of a clean price action over the ES in my personal opinion. So I wanted to see that NASDAQ continuation, but you know, we just didn't quite get it. We just didn't quite get it. Look at how gold is reacting off of its resistance level too. So both of these assets tapping into some larger time frame resistance and getting that rejection off of those resistance levels. This is why it's so important for you guys to understand the overall price action. So I appreciate each and every one of you. How many of you feel like you got at least 1% better? Before we hop off, right? My name is Kyrien Idlebird. This is for the Culture FX. I hop on here each and every day, Monday through Friday at 8 a.m. Eastern Standard Time, because this is what I wish I had when I first started trading. If you got 1% better today, can I get a 1 in the chat? Can I just get 1 in the chat? Right? What time does pre-market begin? It's pre-market is typically around 8:30 to 9:30 because the market opens at 9:30. So anything that's before that is pre-market. Like, right? Gemini says 1, Humble says 1, Mari says 1, Kai says 1, My Time says 1, right? Romy says 1, Electrician says 1. You are helping out newbies for sure. Well, I greatly appreciate that. Lock them up. Lock them up. Yeah, so hopefully you guys enjoy the rest of your day. VIPers, I will be sharing my analysis with you guys here shortly, so keep an eye out for the Discord in terms of what we're looking for. I mean, I just shared it to you guys, all of you guys, but I'll be sending the actual setup to our VIPers here today, and I will catch you guys in the next one. Enjoy the rest of your day. Love from South Africa. Well, love from Virginia, my boy. Love, love, love. What you want?